at this point, what we've got is what we've known for a long time. Markets don't like uncertainty. This was a validation of what we expected to happen. So when it comes out and says, hey, listen, we're going to taper, we're going to stop buying so many bonds, that's just a validation of what we thought. And so it's business as usual. So what I think we're going to continue to have happen is sort of this bumpy continuation of a recovery. It's messy. The supply chain issues have been sticky, but we're still getting better. We're still recovering slowly, but just unevenly. So it's not a straight line upwards. It's sort of a bit of a roller coaster ride, but it's going to continue to get through.
Yeah, I feel like sort of the stampede out of the lockdown pen as far as the consumer goes. You're not putting those cattle back in the yard, are you? Because Americans, they are out. We saw mall spending is up from the pre-pandemic levels. Travel is surging. International is just reopening. Bookings are up 800% from a week ago because
Absolutely.
November 8th, next Monday, we're seeing more intro. So what do you think that's going to do for corporate earnings? And then what do you think that's going to do for stocks, Lee?
So I think from a corporate earnings perspective, in some areas, it's absolutely going to help corporate earnings. There's still lots of dry powder, if you will, out there amongst consumers. We're seeing that. Some of that ability to spend on certain items is going to take a while because what we're seeing and hearing is that there's some things we want to spend as we come into the Christmas season that we just won't be able to get our hands on. But long term, and by long term here, I mean over the next couple of quarters, I think we're going to see continued spending from the American consumer. The savings rate has come down just a tad, but it's still above historical norms. And so I think that's going to give us the ability to continue to see some of that consumer spending over the next several months.
Yeah, is there any part of the market, Lee, that you like more than others right now, or just buy the whole doggone thing and let it ride?
Buying cautiously, we just had the comment around Exxon. I think that the energy sector still looks promising. Again, clearly over the next several months, for some of the same reasons. We're flying around more, we're driving more. Personally, I went to a conference in person for the first time yesterday, and we're seeing more and more of that. We've got the news on the Delta variant. Now we're going to begin to be able to give vaccines to some of the younger children. I think that is going to continue to feed the narrative or feed the possibility that more and more people will begin to join the workforce. Things will continue to go back to normal, but we do need to be prepared for these bits of fits and starts along the way. It just really won't be smooth, but continued improvement.
Yeah, certainly glad to see you back out. Before we let you go, Lee, what do you think is the biggest risk to the equity market? Some kind of winter surge and sort of, consumers get jumpy or I can't imagine lockdowns at all, especially given the election results of a couple of days ago. But what might be the risks out there?
I don't see any sort of risk due to lockdown. I really think and I'm keeping my fingers crossed here, I think we're likely to get past COVID. I don't see a sort of July reversal with the Delta variant. That being said, who knows? There could be sort of a variant out there. A very, very tumultuous, we still got to deal with the early December deadline to get a longer term deal as it relates to the debt ceiling and that kind of thing. That worries me a little bit. But over the course of the next 6-9 months, there's not a whole lot out there that makes me think, hey, this thing's going to get derailed.